Investors and traders, welcome to the channel Market Chart Pattern. Today is 20th of April 2024. Hope everyone is having a great weekend. In this video, we will take a look at the key US stock indices, the bond markets through the eyes of the bond futures, including the long bond future, gold, the dollar index, and we'll try to come up and see what the financial markets are likely to do in the next week. Apologies in advance. A couple of complaints received about the screen not being very clear during the videos. So on my end, usually it's clear, but I think something happens when I am uploading it to the YouTube. So apologies for that. I am testing a new software, but I was having some difficulty setting it up. So maybe in the next few videos, I will be able to get the new software working as well. And I'll try to make sure that this video, when it gets uploaded, it will be uploaded with the proper or is much more visible. So I do record them in 4K though. As always, this video is for educational purposes only and it's not a financial advice. So we had a very interesting week last week in the markets, the stock market I mean, and last Friday was actually in fact really interesting. So we'll take a deeper look at that, but we'll start with the bond market. So we'll start by taking a look at the 2-year treasury note. This is shorter end of the curve, and this chart is on the y-axis. We see the yields. It's not the price, the yields, and of course this is the time. And what we can see is this nice trend line is in place, and the yields are kind of capped over the course of a couple of weeks now, at the almost at the 4 or 5% level, and this has been the case for quite some time, like I mean 2 weeks. And last Friday there was a pretty sharp fall in the yield, but then towards the end of the day it just began to rally higher and just closed pretty much unchanged. In fact, if we just look at you can see it actually in fact changed, close unchanged for the day. So really important, if the yields are going to spike up, this is the key level around 5% a 2-year treasury note. Otherwise, looks like it might just go in a trading range for a while and maybe pull back from here, which is actually going to be good for the risky assets. Now we'll take a look at the longer term bond. So this is the daily chart of the bond futures. Long bond futures is called the long bond future because of this duration, 30-year. It's the longest bond future available in the United States, US market. In the United Kingdom, there is a 50-year bond, which was a gilt, which was introduced a few years ago, rather reintroduced a few years ago. It used to be there, was taken away, and then it made an entry back into the market. Whether the US will follow suit in the sense that they will introduce another bond with a longer duration than 30 years, difficult to say. But if the asset prices keep on rising, then to kind of enhance this debt duration, a 50-year bond or something might come into the marketplace at some point in the future, but that's just pure speculation and just my opinion. I don't know for now. Okay, so here we were expecting a low to come in, and we have this nice ABCD pattern formation here, and we're expecting a low which is around point C to come in around 114, a little bit lower. 113.06 is where it went. Actually, that was the low. The low was 113.10. So the ballpark figures was around here. We had a number of things coming for us here. We were expecting a rally after that, and last Friday we did get the rally, but it just went to the 38.2% retracement of these this swing high to this swing low, and it's just sold off quite a lot. We'll just take a look at that on the 1-hour chart. So that's quite a lot of selling. So if it really needs to move higher, and the yields need to come down, then this 38.2 around 116 level, this is where the price needs to move higher from here, and ideally take out 117.26, which is 78.6, 61.8% retracement of this swing, and then we can say that perhaps we might be moving in this CD leg higher. But for now, that's all what we got was just a little rally, just a few days rally. That's all what we got. Let's take a look at on the Here we go. So this is the hourly chart, and here if we just do this, here we go, and projected from here. So in fact what we got was and just 1-to-1 price projection of this swing right at the 38.2% retracement, pretty strong resistance, and we have just fallen. um, Excuse me. Now what we are looking at is this there is a small pattern of higher lows. If this low is not taken out, then the chances are maybe it's going to make another attempt to this level, and if it's able to take it out to the upside, then that's going to be a pretty good sign, an early indication that perhaps the longer on the long bond, the yields might actually be coming down, as we begin to move in the CD. Like yeah. Otherwise, if we take this point C out, which is 16th April candle, then in my opinion, yeah, there is a 78.6% retracement below, but the chances are we are going to go and test these lows one more time. That remains a possibility, possibly even lower. We'll have to wait and see. Okay, so with that, we'll just take a look at the US dollar. This is the daily chart of the US dollar, and it's just, oops, excuse me, this is not a daily chart. um, Futures, here we go. This is the daily chart of the US dollar, and what we're looking at was this 106.40 level. Basically, we have this gap open here, which is highlighted in these two lines here, and we also have the 1.618 expansion of this entire swing high to low, and then the ABCD was a little bit below there. So this was telling us this is a region to watch, although there's a possibility, at least on the weekly chart, we're looking for the market to move a little bit higher, challenge these highs. But there's a possibility if we begin to get trading range, which we are getting to these lows getting broken down, then perhaps we might actually begin to see more weakness coming in the US dollar, which would be good for commodities priced in US dollars, and of course also the precious metals as well. So it looks like the key is to pay attention to this trading range we are trading in, and if we get a confirmed move lower below 105.50, that could in fact see us move down and challenge this trend line at lows around here one more time. So in my opinion, breaking 104.85, which is structural support around here, break of the trend line would be pretty significant. It could actually mean that the US dollar might have put in a pretty good top around here and might begin to move lower. So we are just waiting and watching that really carefully. On the weekly chart, again, if we are able to break above the 107, then 108.75 is possible. But around here, where we are, the chances are we will have to wait and see if we are even able to get to 107, because on the daily chart, if that resistance uh, remains pretty strong here, we might not see 107. So really critical area where the market is at the moment. Now we'll just quickly take a look at the gold market. This is the COMEX gold daily chart. It's a continuation futures chart. It's not the spot market. I want to make that clear. And what we have seen is ever since last Friday, Friday of the 12th of April 2024, the market has just gone in a trading range, but it's a pretty massive trading range for gold. It has been drifting higher, but if we look at it intraday, it's just a massive trading range, which is, the gold is just confined into for the moment. So the momentum is still to the upside. It remains, moving higher. Maybe it's able to move above this 2450 level. If it does, you guys know that we have higher level targets. So this on the weekly chart, there's an inside bar. So for on the weekly chart to make it a good breakout, 2450 needs to be broken to the upside, and if we begin to break below this 2320, then the chances are there's a possibility we might actually retrace all the way down to 2210, which is actually 38.2% Fibonacci retracement. So those are kind of normal moves, and gold has made this kind of a move prior as well, but over a course of quite a few weeks, months, in fact, whether it's going to be a rapid move lower because of profit taking coming in, or we just do it over a course of longer time. We'll have to wait and see, but this kind of a move is possible, and it'll just be, a market symmetry takes us down to around 2210 as well. And on the monthly charts, what we see is a longer term, even 2500, and then 2700 is also possible. So pretty strong looking chart for gold, but on the daily chart, getting into trading range kind of a behavior. We have seen this like this here. It formed a higher base and then it just broke out. So we'll have to wait and see. But it's just it's a game of wait and see for now, for people who like to trade on the daily charts. Okay, now we'll begin to go into the stock market, and the stock market, it was really interesting because we had a mixed picture. So in fact, let's start with the European markets first. So this is the FTSE 100. It's a blue chip index of 100 blue chip companies for traded on the London Stock Exchange. We had a fair amount of volatility come in, especially last Friday. There was some news about the geopolitical events. You can read about it on Google, for example. But from a technical perspective, a 77.99, where the 38.2% retracement is, this level was not broken to the downside, which indicates that this market is pretty strong. This trend line is still intact, and we know that there is a lot of geopolitical activity, but the market is telling us what the market is telling us, and our technicals are working here. And then we take a look at the German DAX. German DAX a little bit weaker than the FTSE 100, but the key point is that it also closed slightly above the 38.2% retracement of the lows of January 2024. So that is a notable thing, because the this level is being held for 1, 2, 3, 4 days, also almost one trading week, 1 week less. Excuse me, 1 day less. So yeah, the chances are that if it's not broken to the downside, and if we begin to take these highs out, especially in my opinion, this one. Let me show you. This is the inside bar formation. Then the chances are we might actually, begin to move higher, begin to challenge these highs around 18,200. Now let's move to the US stock market. Let's start with the NYA, which is the New York Stock Exchange Composite Index. It's not something which we can trade these days, but I believe there was a time, maybe in the 1980s to late 1980s, where this index was also tradable, but no longer anymore. So here, one thing I really want to point out about NYSE is, it's got about 2,000 or plus issues, including ADRs, which are the foreign companies being traded on the New York Stock Exchange. This is why it's a good one to take a look at. There is a Wilshire index, which is about 5,000 stocks. That's a pretty big index, but for kind of daily analysis, I think this one is a pretty good one to take a look at. And here, one thing I want to point out is that it has made the 50% retracement of its lows from the January of 2024, and last 1, 2, 3, 4 trading days is holding these levels around 50%. And last Friday was a bullish close for this index, so that is something we may need to make a note of. So with that, let's move to the S&P 500 cash index. Now these markets, the US markets, they are giving us a mixed picture, because we have seen NYSE being closing positive for the day. International European markets, we have seen holding those key levels, closing positive for the day, but DAX did not, but still held that level. And the S&P 500 closed negative on the cash basis. It has retraced more than the 38.2%. This is what we were watching for, and once it broke below that, we knew that there is going to be a further downside. And if we were to just take a retracement from these lows of October 2023. We can see that it's also trading very close to the 23.6% retracement. It's not something we take a look at usually, but in such a strong trend, we'll have to also take a look at this. So it has retraced right into these levels, close negative for the day, but we'll have to evaluate in context of other indices as well. So if we just take a look at this on the weekly chart, it's just hitting or sitting right at the 20-week moving average. So maybe that could be a potential support area as well. So now we'll take a look at the Dow Jones index. This is the futures chart. It's not the cash index. A mini Dow Jones futures, and here very interesting. Obviously, we can see there's a lot of activity here, a lot of price movement, a lot of volatility last Friday, but it closed higher and positive. And the important thing is it closed above the very price level we were watching, which was the 78.6% retracement. And it came very close to the 38.2% retracement from the lows of October 2023. So that's very interesting because this index was much weaker than the other indices, and it has retraced at 38.2% retracement. The S&P 500 hasn't done that. It's around 23.6%. So maybe this one is giving us a clue that there's a bifurcation in the stock indices. International indices stronger. NYSE closed positive. Dow Jones closed positive. Pretty good looking candle as well. Although there is a top week as well. S&P 500 closing negative for the day. It's a mixed picture. So we have to put everything together in context. This is NASDAQ 100. This one has been fairly weak as well, and I believe, yeah, it's right at the 61.8%, a little bit below. And if we were to take the retracement, it hasn't reached its 38.2% yet, but it's not too far away either. It's just down about a couple of hundred points roughly, and that's nothing for the kind of volatility that we usually see in the NASDAQ index. So again, it's also getting very close to these key levels. And on the weekly chart, let's have a quick look on the weekly chart. Here we go. Let me just clean it up a little bit. You can see not a very good looking weekly candle, but again coming into this some structural support around here as well. Now, last but not the least is the Russell 2000. So let me go down to the daily chart for Russell 2000. And here's something really interesting for the Russell 2000. It may have made a double bottom around here. So it's pretty weak, but it closed positive for the day. So a lot of volatility in this index. And this could potentially be a double bottom here. We'll have to wait and see for the confirmation. But again, as I was saying, that the indices in the US marketplace, they're giving us a mixed picture. We have Dow Jones closing positive, we have NYSE closing positive for the day, Russell 2000 closing positive for the day. It's the S&P 500 which closed negative for the day. It's the NASDAQ 100 which closed negative for the day. So it does appear that there had been buying last Friday in certain sectors and certain kind of stocks. So Dow Jones stocks, they are high quality stocks. They are Goldman Sachs, it's JP Morgan stocks. There is Apple there, although Apple did not perform that well that day. But there are many other kind of high quality stocks and also a price weighted index. Russell 2000, smaller companies, smaller balance sheets, very sensitive to interest rate movements, but still able to close higher for the day. So the market is giving us some feedback here. And yeah, it looks like we might be getting ready for a bottom. It could be a pretty good bottom next Monday, Tuesday, or at least we are getting ready for a pretty good bounce in the marketplace because we just have been going down for about 3 weeks now, a couple of weeks. So this is what we are watching in the stock market. I hope you guys will find this video much better in terms of the pictures being clear. Apologies, I'm trying to sort that out. So thank you very much for watching the video. Good luck, good trading, and speak soon.